My goal is to give you the timely insights and tips to help you master the game of finance and ultimately help you achieve your financial goals. Hi, my name is Connie from Prosperity Finance. Thank you for coming to the show. I hope you're doing well. Now, you probably heard there was a breaking news this week about this one-off residency pathway. Now, since the news was breaking out, we had a flood of inquiries from first-home buyers asking about possibility of buying first home. Now, given these big events, I thought it would be a timely update about lending to first-home buyers. So if you are first-home buyers and you are waiting for that residency, I think this video is really important for you. I believe good planning is critical to success. So even though you probably still need to wait a little while to get your residency, but now is the best time to start planning. In today's video, I'm going to share with you about 4 tips that you need to be aware of and start working on these 4 and see what you lack of so that when your residency is ready, you are ready to go. So the number 1 is about stability of your income. So what I mean by stability? Well, let's discuss what kind of income are not stable in the bank's eyes. So firstly, let's say you have a casual job. That means you only can work if employer has a job for you and you are available. So there's a bit of uncertainty in terms of working hours on an ongoing basis. And the second type of income is self-employed. If you're running a company, that's really obvious, you are self-employed. But if you are a contractor, like if you are relief teachers, you are IT contractors, and we see contractor dentists or doctors, a lot of self-employed sole traders, like these contractors, they don't think they are self-employed people. But in fact, you are, because your income has some uncertainty. You really don't know if you have income for the next year also, right? It all depends, a lot of factors. So you are self-employed effectively. So if you are self-employed, then your income can deem as unstable. So if you only treat it for less than a year, you only treat it for a few months, then it's very hard for the bank to establish what is your ongoing income level. So that's what I mean by income stableness. The second very important factor is the deposit percentage. Now, you probably know for first-home buyers, you need 20% deposit. Yes, you can get away with less than 20% deposit. But the recent announcement from Reserve Bank is that the banks has a less allowance for people with a less than 20% deposit. Now, in the past, they can give up to 20% of lending for people who have less than 20% deposit. But now it's reduced to 10%. And after taking out the rounding error, etc., they only allow probably 6 to 7% of customers who are looking to buy first home to have less than 20% deposit. So it's getting very, very hard with little deposit now. And so they are cherry picking basically. Sometimes they can't give you a concrete answer why they can't lend you without the 20%. They just cherry picking. Normally they require you are their own main bank customer. That means your salary are credited to their bank for at least 6 months. But it could be other criteria as well. It's very hard to say. So if you can get the 20%, that's really good. And your interest rate will be good as well. But without that, it could be really challenging. And if you only have a residency but not permanent residency, then bank not even consider that because the travel condition on your visa. If you can't get enough deposit, you struggle, have that 20%, let us know. We may have some other option for you. But ideally, you need 20% deposit. Now, the next point is about being careful with your living expense. Now, this living expense excludes some one-offs like travel, holiday, etc., and also exclude the rent expense that you're paying right now, because as a first-home buyer, you won't need to pay rent expense anymore. Instead, you pay mortgage, right? So you can take out these two type of expenses, but the rest of the living expense are crucial to your borrowing capacity. Now, you probably heard there's amendment bill for CCCFA. So banks start taking on more strict approach for living expense, because they have to be a responsible lender. They have to make sure you can afford your home loan. So one of the factor affect affordability is your living expense. Now, a lot of people I heard saying, now I have a lot of takeaways, but once I have my mortgage, I will reduce my spending. I believe you for that, but that's not how the banks see you. So your living expense transactions are really important to determine your borrowing capacity. Especially if you borrow from your own bank, they can look back for a very long time. So it's not the last 3 months that you start spending less. It's actually an ongoing approach. So it's very, very important, that living expense. Now, the next point I want to make is your account conduct. What I mean by that is try not to have unarranged overdraft. It happened to a lot of people, and it even happened to me in the past. Let's say you have your salary put into a saving account, and you have one transactional account to cover your living expenses. Now, if for whatever the reason you forgot there's no enough money to cover your upcoming transaction, and you swipe your card in the supermarket, there's no any warning to say you are overdrawn. The bank still allow you to go overdrawn for that transaction. But later on, you notice there's a big red of that number. That's because you're going into unarranged overdraft. So it's kind of not really good account conduct. I know it's nothing to indicate your character or anything, but this is how the banks see it. They wonder if you have, enough money to live. And also, if you have more than a couple of those transactions over the last 3 months, it automatically deferred. That means it has to be escalated to a senior credit manager to sign off your approval. So it become, more restrict. So very important that you make sure you never had that unarranged overdraft. And also don't have a transaction in the casino. Even as a one-off, it's very hard to convince the lender that you're not going there as a regular visitors. So they are looking for that type of a transaction. So this part is about account conduct that you really need to be aware of. Now, final point I want to make is we noticed that a lot of first-home buyer in the end choose to go to their bank for their pre-approval. I think partially because they really don't know what's the difference between going to a home loan advisor or mortgage advisor versus going to their own bank. Probably more trust over their banks. Now, what I want to say that is, even this is your first home, and even your situation is very straightforward, you have enough income to service the loan, you have a good deposit, but there's a lot of things that you don't know what you don't know. So you can't even ask because you don't know. So when you choose a lender, it's very important. There's some factors that we normally consider when we make a recommendation, such as your future plan, and such as your what product that's very benefit to you. For example, offset or revolving products. If you don't ask, they don't even introduce this type of a product to you. And it's also about repayment, how you set your repayment at a balanced level so that you can, help yourself to pay off the loan as quick as possible. But on the other hand, also, take into account other consideration, other plan, for example, buying car, or upgrade home in a few years' time. So getting good advice is crucial, even for your first home. So it's not just for promoting our service, it's just in general, I believe everyone should use a financial advisor to get their mortgage. Okay, so that's all from me today. I hope you find it useful, or if you have family friends who are looking to purchase their first home, maybe pass this video to them so that they can get the benefit from this video. All right, thank you so much for watching. I really appreciate your support. I will see you next time. Bye for now.